Good morning, MMTs. It's 5:30 a.m. Pacific Standard Time, 5/7/2012. What are we here to do? What we always do, make a market. That's between the buyer and the seller and taking what's in the middle. That's what we do best. That's what we enjoy, and that's exactly what we'll do. However, before we get into the bid and ask in the market and the different names that are in correction mode at the moment, we're going to take a look at the S&P 500 daily chart. The reason why we're going to be looking at it is because there is a problem for the bull. They have a 3-day reversal. Now let's go back over to the original reversal. We had this 3-day period, then this 5-day period. So here, just for the sake of it, let's go to the zoom tool. All right. Here you have 1, 2, you have an inside day 3, there's your 5-day pattern. Then you got your rally and consolidation on this daily level. You came right back up to where that original reversal started, just as they always do in bull runs. And bull runs have to have price volatility as well. So what does that mean? That means that I have put out an all alert, just as I did back in the end of March of 2012. I said that price volatility starting the first day of April would increase, as it did, and it was very factual and to the truth. Now, what I am saying is that price volatility is going to increase more in directional price movement. Why? Because both the long side will have their upside volatility, and the other side of that price volatility, which is the greatest thing for you, is going to give you that directional price movement, which is going to ring the cash register higher. And when they hit, so what am I going to do? When stocks make their run, they're going to roll over. And this is just a daily chart on the S&P. And the S&P right now, what the public model is if it goes into a daily sell signal, it sells down further. Now, having said that, you can see where this major top was on the S&P. Right here. Here's your 3-day reversal. Now remember, just like 1, 3, 5, and 7 trading days, or 1, 3, 5, 7 days of price action, you're below the 10 and 20 days. The public's going to look at it. So what? Here's that support level. Here's another lower level. Now, where does that bull want to own that S&P? And like I said, when we had the original overbought conditions here, that I said we're going to go down. So let's pinpoint it. Phase 1, pullback of the bull. Phase 2 is in play on day 3. Right here. 1, 2, 3. 1, 2 with an inside day 3, 4, and 5 to the bottom, and then this consolidation. But look at the counter trends of the breakouts. Reversal 1, day, so you had 5 days, but then look at here. When you caught these lows and you caught this ascending price action to the upside, that's when you needed to be net long right up to these shorts. Now, granted that we're only in a narrow range, but let's take a look at the major 4-day topping pattern with a 3-day reversal of 7 trading days in price action below the 10 and 20. When that goes into a sell signal here, that's what public model, we would look to see it sell down to the lower support levels. That's going to be the 1360 handle. However, let me caution all of the MMTs that the bull does have a problem in one respect in this cycle. Is if you take a look at the lower end over here, because this is that trend line, and you start getting down here in the S&P. So we start getting down here now. 1320 is what I've said is where that breakout for 80 handles happened right there. So we'll be looking for support there. Now, another thing is, MMT, if you take half of this bar and whatnot, that's 1336, slightly below that 1340 handle on the S&P. And the reason why I'm saying this bar right here was because that was the S&P 500 breakout bar right here, this bar. And you can go right over here to this reversal. But this was a breakout bar of this little fade back here to support. Now, granted that if we break those levels, we know where they are in these trend lines. And where does more selling occur is when you break other lows that break support. You'll have that downside price action that will support that short sell that will ring the cash register. Now, granted, it's been a great run, but remember that this reversal is only in the beginning. What we would look for is to see what kind of gap or what kind of news can come out, but what is the percent level below the 10-day simple moving average and the 20-day simple moving average. That's what the public looks at. So they're going to make decisions based on that. All right, that's the S&P 500. Nasdaq Comp, well, it looks the same way, MMT. And we're doing this all in pre-market right now, and it's 5:37, so we do have time. We're going to get busy. But let's take a look at this Dow Composite. Man, look at this. Whoa. Here, let's draw some trend lines together. Look at that. Here is where these tops were. Top one. Look at these reversals. Here. Then you start getting down in here. All right? And you hit these, and you look at here. Now, having said that, on this Nasdaq Composite, you can see where these turns are taken and where the gap down below those simple daily moving averages that the public will look at, and they'll look at them thirdly. So basically, here's your support level. Right there. Okay. Day 2. But let's take a look at the last 5 days. 1, 2, 3, 4, 5 daily pattern. Price action with that gap down reversal. This gap down reversal is a counter trend to this gap up reversal. Period. They happen that way. Another thing I would like to tell you, I'm going to clear that MMT. And what I'm going to do now is go a horizontal trend line for you so you have that price. And where does most of the selling occur? Is when they break those support levels. And we know that beyond a reasonable doubt. However, we're market makers. Now remember, I have been shorting all the high beta stocks just because they need to go into a reversal, and you need to take the money when they go into reversal. So let's go right over here in this picture. And let's take a look at the 2900 area. MNTs. Here we go. How about that? There's that breakout right here. So let's take a look at one more where there's a gap sequence. And we'll put it slightly just right there. That's 2870. Here's where the major breakout occurred. Right here in 2012 at 2829. Everyone was shocked how they got it up there. But just remember that bull markets have increased price volatility once they start to establish their multi-year highs, as they have, and as we have said. So when I zoom back in here, MMT, take a look at the base of it all. Take a look at the base of it. So here's where it all started. Here's where those gaps are. And that's where the public got on and they burned it. Now, does the bulls that were on the sideline that never participated in these rallies, do those bulls want to participate right away? Stay tuned. MMTs during the day, that will be decided by you between the buyers and the sellers, and you taking your profits between the two parties. Period. For the standard public and whatnot, this is a public model. And so basically, we got support down here right above the 2900 handle and some 2935, 45 areas. We're at 2956. We're not that far away. from this support level, MMT. And then slightly below it where the gap up is, you can just call this about 28.75, but even though it says 28, yeah, about somewhere in that neighborhood. So this is a 200-day moving average. And in bull runs, in bull reversals, once they make the 52-week highs, it's nice to shake the people out of their positions so that MMTs can buy wholesale at lower prices. And that's what we do. So that's the Nasdaq Composite. And the reason why I'm showing it along with the Nasdaq 100 chart right over here is just that I want you to start the week out correctly. And it is May 7th, 2012. The time is 5:41 a.m. Pacific Standard Time. And we just came off a weekly options expiration, and stocks are rolling over. Look at here. Nasdaq 100, it's headed this way. They all have something in common called the 200-day simple moving average. That's the green line down here. However, they have to break these key support levels, and as they do, then stocks are going to hit resistance and sell off. The put side of the market's going to be the side you're going to want to make that transaction, and the short sell. Because selling would pick up when you break these support levels, MMT. Okay? And this is your support level, and you're right on it. And you're gapping below it right now. The futures have come back a lot. Once again, they have to have a reason to sell QE3 to the public. So, part of the support level in here is that selling increases, which will power your put option. So when you get hit at the wholesale price, your put option will go up $3 or $2.50 in value. Because when stocks hit resistance and you're breaking support level in Nasdaq 100, remember it's the time of year, MMT, as I always say every year, is that it's time for the tech to have a pullback. So it's important that as people take their profits and whatnot, you want to be on that side of the tape where that money prints, and that's going to be put options. And why is that? Because when stocks hit resistance levels, they're going to turn and roll over, but they're going to bounce off support very strong. So when you bounce off support level, you want to be that buyer now, and you will. Just be aware of where the key breaking points are right up here. Here's your resistances. Here's your nice reversal trend that I loved on the Nasdaq 100. Phase 1, there are 4 phases to a bull reversal. Here's phase 1 right here. Here's the counter trend with the gap. Bingo. Here's the gap down the other day. All right, and you're at support. This is that topping pattern, 1 day, 2 day, 3 days, 4 and 5 right here. 4 days in price action, you were trailing above the descending value of the 10 and 20 day simple moving averages, as very correctly seen here. There is no doubt. So, based on where the public is going to make their decisions and reactions to the markets is where your profits are. Because that's how you remember. One thing about what you're here to learn to do is that there is 20% of a population that takes money from the other 80% of the population, and the MMTs are the ones who take from the 20% that take from the 80% of the population. That's what our mission and goal will be today. I've covered the Nasdaq 100 and you know, I'm showing the Nasdaq Comp. As far as the Dow goes, it's got the same story to start the day. They all have the very same similarities, and our earnings season is winding down. You can see this Dow just made all, you know, look at these highs up here. Look at these resistance levels. Same story as I just went over the others. So we're going to get busy and get to work. And there's going to be lots of new features on our new website that we'll be launching. And there are going to be various programs for people of all walks of life who would like to engage in capital markets and what our stock exchange is about. I would get signed up for the introductory